Welcome to Startup Synergy with Sridhar and powered by Idein Ventures, a global private equity firm headquartered in UAE. Here we decode the world of startups. We talk about how startups become successful and how startup investors become rich. We talk to experts from the industry and share with you everything you ever wanted to know about startups. We talk to entrepreneurs and investors and find out the methods behind the madness of getting larger returns. In today's episode, we will talk about startup ecosystems in India and how it's impacting USA and those living in the United States of America. We will focus on how residents of USA can benefit out of this ecosystem and some do's and don'ts in the process. We will also dive deep into the globally successful startup and understand what it takes to be successful. During the show, we will also take calls from viewers, sometimes not in the show, who seek guidance on any matter, and from entrepreneurs and startups who are seeking investment or advice on their startups. We will share and discuss stories, anecdotes that can help businesses, startups, investors, and all our viewers. Today, we have here a distinguished, a dynamic young leader, Tanmay Perwala, and she represents a private equity firm, Idein Ventures, and she will help us dig deeper and do strong analysis on today's topics. And welcome, Tanmay Perwala. Welcome to TV5 Studios.
Thank you very much.
All the way came from New York City. I know it's a busy day. So how are you feeling?
Well, this is my first time on television, so this is very exciting. I'm very excited to be sharing, my knowledge about private equity and venture capital firms out there. So very happy to be here.
And this is the nice association you have with Idein Ventures.
Absolutely, it's been incredible partnering with them.
Yes. So let's start with our show. I know that here everybody talks about startups and all those things, but before that, let's throw some questions. And we had to, since there are no callers, and we are going to be interacting our show, and
sure.
we every week in this we pick up different topics, and so we are going to be covering various topics, and let's see that. So Tanmay, let's start with today's understanding of ecosystem. What is really happening with the ecosystem? What is ecosystems, business startup? In the sense if anybody has a company and let's say some startup company, and do you think that is a startup or is it a different criteria?
So, well, each one has their own definition. If you ask me, a startup is something that is very scalable and is looking at a growth rate of say 3x to 400x, right? Just starting a regular company, I wouldn't call that in the traditional investment side of things as a startup. So really something that's going to disrupt an old industry and show tremendous returns.
So I think let's start with an understanding of the startup ecosystem. What's really happening across the world? There is a myriad of news surrounding startups in different countries, and we get conflicting opinions regarding the future of these companies. We see multi-million-dollar companies going bust, and also we see some companies adding hundreds of millions of dollars worth in just few months, like Uber, or so many companies are there, not even 1, 2, 3.
Right.
So what do you tell us to our viewers?
Well, a lot of big companies are being disrupted, and the primary reason because of this is technology, right? So now think about these large companies as a giant ship, right? And technology is changing so quickly, and for these large companies to adopt this technology, steer course and change direction takes a lot of time. Versus a startup, they can just pick up this new technology, create a phenomenal product, go out there to market and disrupt the market completely. And that's what's happening today. That's, as you mentioned, Uber. That's exactly what Uber did. Uber adopted technology and disrupted a decades-old industry, right? And it's happening at a tremendous pace. And the pace, again, because of how quickly these firms are growing, the returns are also as high. And we talked about ecosystem, right? The ecosystem is truly global today because you can develop a product here in the US and then you can make certain tweaks and then take it across borders to say India and vice versa, right? So the fact that you can scale globally is now accelerating the growth, and that in turn is accelerating the returns as well. Now, you should be cautious about risks associated as well here. Everyone has their eyes on the startup, gold mine that is. So there's a lot of players out there, a lot of different companies that are coming up. So it's also wise to be cautious about how things are happening and then seek advice from the experts.
Yeah, I mean, everybody is, as you rightly said, everybody is after startups, but always there are always risks are involved, and and especially if you look at that, it's typically said that 9 out of 10 startups fail, and 1 out of 100 only startup gives the returns what it promises. I mean, though the promised returns are very high, the expected risks are also very, very high. So does this mean startup investments are unsafe, or there are ways and mechanisms to mitigate these risks?
There absolutely are ways and mechanisms to mitigate risk. One of the first steps is to pick that 1 in 100, right? And it's not sheer luck or a gamble that you pick that 1 in 100. There's a science behind it. There's a lot of parameters. There's stringent analysis that goes into picking that 1 out of the 100. For example, at Idein Ventures, we listen to probably 300 pitches before we pick that one company that we go and invest in, right?
So
and
that means, is it like every 300 you pick up only 1?
That's
the ratio typical?
That's the ratio, and not just Idein Ventures.
So do you think that 299 are that bad?
I'm just rounding up here.
Okay.
But most venture, a lot of venture capital firms out there will have that ratio.
I mean, is that the criteria, like the more the ratio is, the more the popular or the prominent of the VC? Does it like that?
No, I wouldn't say. I wouldn't say that.
I mean, if I feel that if they're all, 10 coming very promising, like Uber, Google, or any other company.
It's very rare that happens. There's a lot of good ideas and bad ideas out there, and we've observed historically that we typically get to find, that one company out of every 300.
So it's really like hunting the real diamond out of all.
It really is. It takes a lot of effort. And to your point, right, that's how you mitigate risk. You really go in search of that one company that has the potential to grow. And it's not just, so that's just selection, right? After you select the company, there's a lot of risk mitigation tactics that you need to employ along the, the entire life of that company. Be it in terms of mergers and acquisitions, which then help us to make riskier decisions later in the line. There's also strategic partnerships, extremely important. We're always seeking strategic partnerships that then add value to the company, and that really come in handy on a rainy day. See, venture capital firms and private equity firms, they specialize in mitigating risk, right? So when an expert is working with you, risk is automatically lowered. And I would say that's the same with any investment, right? Be it real estate or publicly traded stocks. You work with the experts to mitigate risk, and the same goes for the startup investment world as well.
Yep. And since you talk about a lot of risks, so risk is just a factor of the mechanism through which such investment is made. If the mechanism is appropriately chosen, risk can be minimized. Since we are talking about investment in startups, it will be appropriate to discuss other modes of investment typically applied by NRIs who stays in USA. Let's compare all avenues of investment and try to dissect some of them.
Sure, absolutely. So without stereotyping anyone, right? We Indians, myself and you included, we love investing in gold and real estate. And for good reasons, those have yielded good returns in the past. But like I said, right, technology has come in, industries are changing, the whole world around us is changing, and so should our investment strategies, right? So let's talk about gold, for example, right? If you look at gold investments in the year 2015, they fell by 5%, negative 5%. And the same happened in 2013 and 2014. The last time gold yielded a positive return was 2011 and 12, yet we continue to invest in gold. My point is that...
So you mean to say that gold investment is not good nowadays?
See, gold, the price of gold is dictated by a lot of global policies, and it's very hard to predict how these policies are going to change. Real estate in the past was a very hot investment. Right? There was a time when real estate was growing
Still,
like
India
crazy.
Is booming in real estate. A lot of people
not as much. It's slowed down now.
But the thing is, if you look at that, the startup, as you rightly said, like 1 out of 100 or something, and success story, but real estate is 99% or 90% success story. Don't you think that is more lucrative in terms of a smaller investor
Sure.
who doesn't want to take risks?
It really depends on what sort of returns you're looking for, right? Earlier, real estate investments in India yielded very good returns, but now the market has slowed down. If you look at startup investments, we're going to be talking about Uber later.
Yep.
People made 400 to 600 times their investment. You're never going to see that
we'll
today
talk
in
to
real estate.
Uber more, but let's
Absolutely,
talk about
yeah.
the traditional, tangible gold and real estate seems safe because of their tangible nature, but may not be safe as some other modes. Returns need to be analyzed using historic data in the coming episodes, but we will discuss the other modes of investment as well. But now that we are talking about investments in India by NRIs, let us understand why India is a major destination for technology investments now. So what is so special about India? It is population or internet penetration or the overwhelming technical talent. Do you think businesses in USA should look at India as a major market?
Absolutely, they should. So if you see the internet penetration in India, it's about 19.2% today, right? And a lot of that came in the recent years due to efforts by the government on digitization, and it's just 19.2. There's so much more to come. So the pie is only going to get bigger. Opportunities to scale and disrupt are only going to keep growing. So that's one part of it, right? The second part of it is that in India, business, there are a lot of unorganized players there. There's red tape, there's lobbies, etc. There's so many challenges, and every challenge provides an opportunity. And so, absolutely, NRIs should look into investing in Indian startups. Now, it need not be you directly investing in a startup. It could be you following strategic partnerships as well. There's a number of ways in which you can participate in this growing pie, and we'll talk more about it today and in the coming episodes.
And also, we would like to show the viewers, since we also talked about the success stories, like 9 out of 10 startups fail and 1 out of 100. So let's show the slide 2 to our viewers, and that way they also get the, especially our show, a lot of inventors as well as investors and a lot of experts who are related to in this industry may be watching. And, we would like to be discussing those things also, slide 2. And if you look at that slide 2, and startup high risk and high return, analysis of several parameters, backups in the form of merger acquisitions, and the creation of strategic partners to add to the overall value of the company. And similarly, and we also have another slide, since we already talked about it, is you talked about especially NRIs staying in USA. And let's also compare with the slide 3 and see that what is there for the BSC, Bombay Stock Exchange Index. You were talking about the gold versus the real estate thing.
So you can see how gold hasn't really paid off in the recent years. You can also look at, the BSE Sensex, which is very volatile to market sentiments, right? So you can see some really big swings there, but that does not happen in startup investments because it completely depends on the company's performance. It is less exposure to market sentiments, right? It depends on you picking the right horse, training it, nurturing it, and then seeing it through the finish line. So it definitely is, I wouldn't say it's less risky. There's positives and negatives to both sides. And we'll talk more. We'll talk more about it and uncover the mystery behind it in the next episodes. Got
your point, that thing. And similarly, we have one more slide. Why India investment? We were just talking about that. We were talking about a lot of digitalization is happening and a lot of internet penetration. So do you think that right now the India is the real good market?
Absolutely, there is so much happening. There's a lot of
while
action.
You're talking, I would prefer to show the slide for our viewers.
Sure.
And go ahead, you were saying something.
Yeah, so I said, if you've seen just in the last few years, right, there's so many startups that have taken advantage of digitization and the growing rate of internet penetration in India, and that's causing, the pie to grow, which is why I think it is definitely a very wise investment decisions by NRI investors to participate in this growing pie.
And do you think that because of a lot of internets and a lot of digitization, So nowadays, the startup where it is earlier traditionally USA or advanced technological countries, they used to have some upper hand, because nowadays, because of the the whole thing has become such a small world right now, because of everywhere is so much of especially the internet has really killed that and made it happen. So do you think that the startups, I mean, I know that you talked about it, but I'm just saying that is is really India is going to be a plus advantage because of at least 19.2% are internet based there.
Exactly.
There's a huge penetration.
And you lay on top of that the population density of our cities in India, right?
So huge.
It's tremendous.
They're coming with the smart cities nowadays.
Exactly. So you're able to deliver services that were in person now via the internet, or to home services, right? Previously, I'm just going to talk about, say, women had to go to a beauty salon before.
Yes.
It was, it was like you had to take 3-4 hours of your day out to go. Today, you have an app.
Yes.
You can call for whatever you want. You can pick and choose, and they come home to you. This was impossible 5 years ago, right? But that's sort of become the norm. That's how women are operating in India today.
Unfortunately, people are also not going to temples and like religious places. They're rather sharing on the WhatsApp messages or social media and worshipping there itself. The technology is
more
really
people
changed.
are worshipping now.
Absolutely.
So it's a good thing.
Something happens, it is circulated everywhere. Which is good. I mean, we like it. Instead of watching, and I think the trend, the technology has really played very lot.
And it
There's
will
no
continue
doubt
to
about
do
it.
so. I'm so excited to see what, all the wonderful things that are going to come.
Yes.
And the whole world, like you said, is going to shrink. And given on top the unique challenges that India poses, I'm very excited to see how these startups are going to tackle those challenges and provide true value and address pain points of the Indian consumer.
Got it. So let's try to understand more about the returns received by some of the successful startups, and what examples would you like to take to explain this to our viewers, Tanmay?
So we've already touched upon this. I'd like to talk
Yes.
about Uber. It's the biggest unicorn out there. We'll be talking about other.
I know you talked about Uber, but the thing is, I mean, what do you think that really they made it happen of returns of, you said 400 to 600 times, you said?
They did, yeah. So we can talk about Uber's history of investments. Before I get into it, I just want to say that yes, Uber's had some setbacks in the last couple of quarters, and people might question their valuation. I'm going to focus more on their early and mid stages, which is where most of the money is to be made, right? So shall we dig in?
Yeah, sure.
Okay, so Uber in 2009, right, like any other startup, started raising money from friends and family, right?
Yeah.
And after that, that's when they started going to institutional investors to raise money.
I think they raised some family and friends around 1.4 million or around that.
A little lesser than that, and then they raised 1.4 million from first round capital. So what happened was, initially they were trying to disrupt a market that did have a lot of pain and a lot of friction in it, but people had come to accept that friction, right? People had come to learn to live with how cabs and taxis operate here. So it was very difficult for investors to see Uber's vision. So it takes a lot of stringent analysis, due diligence, and to be able to see a company's vision through. And First Round Capital was able to do that, and they invested 1.4 million back in 2010 at a valuation about 4 million, right? So after they made that 1.4 million, what happened was Uber then invested in its technology, they made it better, and then they started going out of the US. They took their product global and they kept growing. So just from 2010 to 2013, that 4 million valuation then became 3.5 billion.
Awesome.
Billion in 3 years, right? Now, it is said that there were opportunities for secondary sale exits at that point. I don't know if people took it or not, but irrespective, they made 400 to 600 times returns for their investment, right? And
that is the first time investors.
Exactly.
For any product, when they introduce, always there is a growth curve and some sort of but do you think that from 0 to they made 3.5 billion, but from 3.5 billion to more is really happening in the same
come 1
growth?
year, so 3.5 billion in 2013. In 1 year, 3.5 billion became 17 billion. So 2,000 times that investment grew. So it's truly tremendous what technology and the right team and a vision and investors' backup and mentorship can really deliver in the
That's
market today.
That's the reason it's one of the companies where the growth in valuation has become a trendsetter.
Absolutely, it has. Everyone wants to be an Uber now. It's their dream.
Yes, it's a very classical example for startups.
Yeah, which is why I thought today it would be good to start with Uber. I want to make it more real for people, so people might say, you know what, this is all fine, it's all on paper, right? People made money on paper. People might say
paper money, basically.
Yeah.
That's so huge.
Yeah.
Yep, paper
So
money, real money. We are talking about like.
Is it real
a
money?
lot of people, a lot of people say that okay, billionaire or millionaire. Ultimately, there's no money in the bank. Like sometimes there's a lot of comparison is going on also. I mean, where their secondary exits for the initial investors. What the terms for initial investors simple enough to allow them to exit easily, apart from the paper money and real money?
Definitely. So the initial investors who invested, say, for example, $20,000, right?
Go ahead. Let's play the slide 7 also for our viewers. Go ahead, please.
Sure. So the initial investors that invested around, say, $20,000, they made, in 4 years' time, they cashed out at $40 million, right? And there are real people who went on to start their own funds, like David Cohen and Mike Walsh out there, who did do that. Now, with any startup, what happens is the initial investors, the risk is higher, and hence the returns are higher. So the terms at the very beginning are quite lenient. There's a lot of opportunity for exit initially, which these investors did take. What happens to later investors is that now the negotiation table has turned, right? Uber has now proven itself. There's lower risk. They have scale. So what happens now for later investors is the terms are much more stringent. In fact, for the very recent Uber investors, the terms were so tight that they probably won't even be able to exit after an IPO. So again, just remember that the highest returns are initially, so is the risk. And as you keep going down the life cycle of the company, risks are lower, and so the terms get tighter and your returns get lower as well.
Yes, got your point. And also, what we are talking is, so a lot depends on identifying the right company, its early growth stages. Especially we talked about, you were emphasizing a lot about the Uber. So we want to identify the company similar to Uber again. So those who were able to see the potential of Uber in its first few years have made real killing. In one of the future episodes, let's talk about exit and understand the various ways in which exits can be done. But right now, let's talk about depends on a right company like Uber. How to identify?
Absolutely, we will be. Exit is a very meaty
Everybody
topic.
knows that they are the success story, but finding out and people, a lot of investors, they want to invest, but finding out another Uber is a big challenge now.
It is, and that's why venture capital firms and private equity firms are out there. And to your point, right, exit is a very meaty topic, and we'll definitely be diving into it more in the subsequent episodes.
Yes, and also during our show, and what happens is we are not taking calls deliberately. And because typically in our live shows we take callers, and we don't want to take the callers, and we would rather take the emails in the show, because this subject is so vast, and we have our development team or analyzing team. They would like to analyze your questions, and so that way we can that's it would also help the speaker like you or guest like you who is coming to our show, so they are prepared for the question so that they better answer instead of vaguely answering. So that's the reason we preferred in this show to send us the email to email ID, so that way we have a ample time of preparing it. And fortunately, and for this, based on this week, and a lot of people have responded, and there is a gentleman Prakash from Los Angeles, and he responded, and he wants to know more about the Uber story. Again, same thing, like how we talked about, I think the moment we talk about startups, everybody is talking about Uber. Looks like this gentleman is also the same thing. And he says that most of the valuation for startups is fair to be only on paper, unlike those in the stock market. So would you like to comment? I think we just talked about it, but since he mentioned, Prakash, I think his name is Prakash from Los Angeles, yes. So, and he wants to know your comments.
Sure. So the value of any asset is dependent on the existence of buyers, right? So if
Yes.
buyers exist for a particular asset, it is considered
Liquid
liquid.
asset, yes.
Exactly.
Otherwise,
So
it's,
in the stock market, it's because buyers exist that this trading happening. The minute buyers go down, your
It's
sale price
always
goes
based
down.
on supply and demand
This-
everywhere. not only
Exactly.
here.
The same is the logic for startups as well, right? So if you are invested in a startup with solid performance, there are going to be buyers out there. There are going to be opportunities for you to exit. And again, your team should ready the buyers for you. There are third parties and neutral entities out there that can value your company such that buyers will automatically start coming, looking at the kind of valuations that your investment has. So I would say it's definitely as liquid as any other market out there.
Great. I mean, and also there's a Bhat, I think his name is Bhatia from UAE, and he wants to know more about the risk associated with investment in an Indian market. He says that there has been no major success story of exit in India.
Well, it depends on how you define success, right? Now, if you're going to define it as an IPO, yes, the Indian IPO scene hasn't been as hot as it has been in the US. But if you do talk about secondary sale exits, etc., there's definitely been a tremendous amount of activity that's been happening in India. For example, one of Idein Ventures' own investments, right? It grew by 3x in 1 year, and it provided an opportunity for partial exit for some of the investors. And this is not even, our show horse. It's not even the most best performing company that we're invested in. So I would say there's definitely a lot of excitement and a lot of opportunities to exit. You just have to look at it in the right lens.
Got it. And well said that point. And also, there is a Sam from Washington DC. He wants to know, I want to start a company in India. I already have an LLP in USA. How do I go ahead with incorporation? So looks like he's already, I think, limited liable partner, I believe, LLC,
I see.
LLP. Yeah, LLP in USA. How do I go ahead with incorporation?
Well, we will dive into incorporation.
He wants to start a company in India.
Got it. And he has an LLP here
Yes.
in the US. So we will be deep diving into incorporations and the technicalities involved in it later. But in short, I'd like to answer the gentleman's question. So if your company is in the form of 100% FDI allowed domain, hopefully 100% automatic, you can go ahead and start a company in India as a 100% owned subsidiary of your LLP here in the US. I would recommend registering it as a private limited company and not an LLP or a partnership. There tend to be regulations there which is why I wouldn't recommend that. So that's my short answer, but please stay tuned for the episode where we'll be deep diving into it.
And not only every time the startups, and we also want our existing business people to contact us for getting the more investment for their expansions, and not necessarily that every time they have an idea and they want to start or something. So is it typically possible from your private equity firm side to really encourage the those type of companies having existing business? Who are your ideal people to contact us, basically?
So we are sector agnostic. That means we're open to companies from all sectors, right? Now, we go through a very rigorous 3-layered analysis and vetting process. But that said, if you have a very intriguing idea and it has a lot of potential, we will fast forward you into the final stage. We are open to businesses who if you have an existing business in the US and you're looking to expand in India, you're a first-time entrepreneur looking to start something new, you have something in India and you want to scale it to the US, all of it. We are a global company. We have footprints across markets, so we're open to people from all sectors, all stages of growth. We're here to mentor you and help you make the right connections for you and partner with you. So please email us if you're interested, and we'll be very happy to hear from you.
So basically, you are looking from our viewers or existing companies. If you are really looking for investment or advisory services about the startups, I think you should really reach the email ID which is coming on the screen, or we will read it out where to send your questions for existing businesses, as well as for our next episode. Also, we are going to tell you our topics, so that way you can also send us the questions in advance. So that's what basically, typically since we take calls, we are not taking it, so we are telling our viewers to follow the guidelines of this show.
Absolutely.
The best is the email.
It definitely is, and it helps us come back to you with more impactful and precise answers. So I think it's a good format.
Yes, and also I have another caller, Arun from Atlanta, and I have a business in the domain of recruitment software. We provide recruitment services to companies in the USA. Is my company investable? Is my company scalable? Our recruitment services is also aided by software created specifically for the purpose. The software has been created by a third party that specializes in cookie-cut recruitment software. We do cross-border recruitment as well. Can you please comment?
Well, it really depends on your software, right? The fact that it is cookie-cut is a concern, because if you can take it off the shelf and use it, so can your competitors. So we'd really like to see something that is unique to you, and I recommend being very specific and very targeted. That'll help you again find funding. For example, Idein Ventures is invested in a firm called Zoeasy, which is based out of UAE, which specializes in sourcing blue-collar workers for the Middle East. Now that is something that is really specific, and we have a dedicated team that specializes in this particular aspect. So incoming competition can't just come in and enter this domain. Now that's definitely something that we'd like, if your idea, if you can mold it around something that is that unique and specific, and a software that is scalable, we'd definitely be interested in talking to you.
And also, since we have not much time, so I would like to wrap up. There's one more. There are a couple of 5 more questions are there. We can't take all 5 questions, but we'll take quickly one question. John from New York, he says, I have a business in the real estate domain, and we are selling properties in USA to individuals residing in India online as an investment asset. We are expanding ourselves to properties beyond USA. Would you like to consider our business?
Well, John, real estate is very interesting, right? Because you can scale the real estate product across markets with a few tweaks. We've already invested in 2 or 3 real estate startups. That said, I would be interested in knowing what is it that you're offering of unique value, right? If so, for Indian investors, if they have other very attractive investment opportunities available there, why would they invest in the US real estate market? I'd recommend you come to us with a very nice framework which talks about the complete market potential, how much of that market you are going to capture, growth trajectory, and also your design target, right? So things like income, geographic focus, education levels, etc. And put together a real plan for your potential, and that'll be helpful for us to evaluate you.
And also, we need to conclude, Tanmay, and we would like to discuss some conclusive points now. In this episode, we majorly discuss about how startup investments are very interesting, and if done in the right way, can be very fruitful as well. We also talked about some aspects which businesses should take care of while expanding or while seeking investment. What is your message in quick manner for NRIs who are planning to start a global business out of USA but focusing India as well?
Well, I would say the Indian startup ecosystem is an incredible opportunity. You can either be an investor or an inventor. either works. So if you have an existing business and you're looking to scale, that is awesome. If you want to start a brand new business, then that's also welcome. Either way, I would highly recommend you work with the experts, work with a private equity venture capital firm like Idein Ventures to start off, to mitigate risks and tap into this amazing growth market.
So in the coming episodes, we will talk about how to get exits from startups and remove one of the myths about startup investments being not so liquid. We will also talk about another unicorn startup and explore more of these interesting ecosystems for you. And also in the coming episode, we will also talk about alternative investment to share market, public in India and USA, deep dive into risk mitigation while investing or partnering with startups. I mean, these are the topics we would be covering in our next episode. And so obviously, if our viewers would like to send any questions, I would read out the email ID, and so that way you can send it to your questions to s3@ideinventures.com. And again, it is if you can play slide number 10, our viewers can see the email ID. It is s3@ideinventures.com. And if you can send us the questions, your anything startup related, and so will be very helpful. But your questions should be restricted to these particular points. And you can send any other thing, but we'll be covering in our coming episodes all those questions. But rather we would focus on alternative investment to share market, and also deep dive into risk mitigation while investing or partnering with startups. That would be more ideal for next week. And thank you very much, Tanmay Perwala.
My pleasure.
And I know that it's a very hectic time of traveling in the evening time from New York City, but all the way you came to our TV5 studios and Mana TV studios, and you told us the good parts about the investment opportunities and other thing. Thank you very much.
Absolutely.
And stay tuned to our show Startup Synergy with Sridhar, and we will complete 360 degrees of startups in this show. Stay tuned. Signing off, Sridhar Chillara. Thank you.